Good morning. You're watching All You Need to Know on Bloomberg Quint Live, and I'm Alex Matthew. First, the headlines. US President Donald Trump says that he expects to strike a trade deal with India very soon in order to further boost economic ties. He also hoped for India and Pakistan to work something out on Kashmir. US House Speaker Nancy Pelosi, meanwhile, has opened a formal impeachment inquiry over President Donald Trump, citing violation of oath of office and obligations under the Constitution. The government will stick to its borrowing plan for the remainder of the financial year, according to a government official. This despite offering tax cuts that will cost 1.45 lakh crore rupees just last week. Now, the Ministry of Labour and Employment has notified a 10 basis point hike in the interest rate on the Employees Provident Fund for the financial year ending March 19. The current rate stands at 8.55%. And at least 26 people were killed and over 300 were injured after an earthquake measuring 5.8 on the Richter scale jolted Pakistan-occupied Kashmir. Let's talk about the US markets now. It was a weak day of trade for benchmark indices on Wall Street. Sentiment turned risk off after President Donald Trump took yet another swipe at China at the UN General Assembly, saying that he will not accept a bad deal from China. Technology shares led the underperformance of the Nasdaq. Ritika Gupta of Bloomberg News tells you exactly what happened in Tuesday's Wall Street action in this report.
It was a down day for US stocks. The S&P 500 fell by the most in a month, and the Nasdaq fell below its 50-day moving average. Meanwhile, treasuries rallied, and all this flight to safety after a barrage of negative headlines from trade to regulatory scrutiny and, of course, political turmoil. Towards the end of the session, news that Democrats would announce an impeachment inquiry of President Donald Trump over the Ukraine controversy took the bulk of investor attention. Earlier in the day, we also had consumer confidence data that fell below estimates, and all that added to a gloomy picture that we saw play out in the sectors. 9 out of 11 ended the day lower. The tech sector and FANG stocks were particularly hit. The FANG index is off around 3.25% after President Trump's comments at the United Nations about the growth and power of social media companies. We also saw chip makers in the line of fire over President Donald Trump's comments on China and trade. The energy sector actually led the declines today, and that's on signs of Saudi Arabia making progress in restoring output. The only sectors that saw some gains were utilities and consumer staples. And away from stocks, we saw haven assets rally. Treasuries were higher, with the yield on the 10-year falling to a 2-week low. We saw gold get some gains. And finally, I want to draw your attention to volatility, because the VIX index surged as much as 18% today. That's your markets wrap. I'm Ritika Gupta in New York with Bloomberg TV.
All right, let's also take a look at the Asian markets. I'm joined live by Rosalind Chin, who's joining us from the Hong Kong studios. Good morning, Rosalind. A lot of news updates overnight on trade, and particularly in the political circles in the United States affecting markets. How's Asia looking this morning?
You're absolutely right. A lot is going on, and the markets are looking decidedly risk off this morning in Asia. The MSCI Asia Pacific losing 0.5%, and pretty much all the major indices are pointing down at this moment in time. As you mentioned, of course, we did have these geopolitical, essentially, issues all around the world, creating a lot more uncertainty for investors. We've had Nancy Pelosi saying that the US House is opening a formal impeachment inquiry of Trump. In the UK, of course, Boris Johnson had his suspension of Parliament overturned by the Supreme Court. And of course, Trump at the UN, he made a speech there that didn't help, in which he trashed basically China's economic policies and trade policies, and defended his imposition of tariffs, possibly taking this trade roller coaster that we've been on to another turn, yet just ahead of some high-level talks which are coming up in the next week or two. All of this, of course, really not helping sentiment at all globally. And of course, Asia is definitely part of that mix. Now, we are seeing, of course, the yen in Japan gaining as the dollar is weakening. The yen near a 2-week high. It's at 107.20 right now. The Nikkei and the Topics both trading lower, down by about 0.5% for the Topics and more than that, in fact, for the Nikkei 225. Autos and tech stocks often are the ones that do drag on those indices when the yen is strengthening, and that's the case today. South Korea's Kospi also going the same direction, down by 0.66%. That's after the president there, Moon Jae-in, and Donald Trump ended their meeting without any particular breakthroughs on denuclearizing the North Korean regime. China and Hong Kong just opening here again. In the red, we've got the Hang Seng losing nearly 0.9%. 0.9%. The Shanghai Composite and the CSI 300 both trading lower. Finally, a quick look at Australia, as always, down by 0.6%. Gold, though, has been rebounding to 2-week highs, and we have seen some of the gold miners in Australia gaining on the back of that, like Evolution and Newcrest. Those two particular stocks actually are making gains today in these troubled times. Finally, a quick look at New Zealand, because the RBNZ is expected to announce its policy decision today. That's expected to stay the official cash rate at 1% there. New Zealand, it's pretty much flat, although it is pretty much the only market there with any gain at all, up by 0.03%, just about hanging on to positive territory there. Back to you.
Thanks so much for that, Rosalind. Now, the UK Supreme Court handed out an unprecedented legal defeat to Prime Minister Boris Johnson, terming his decision to suspend or prorogue Parliament unlawful. It also instructed lawmakers to return to the Parliament as soon as possible. Let's listen in to some political reactions.
The decision to advise Her Majesty to prorogue Parliament was unlawful.
I welcome the judgment this morning.
It had the effect of frustrating or preventing the ability of Parliament to carry out its constitutional functions without reasonable justification.
I strongly disagree with what the justices have found.
It demonstrates a contempt for democracy and an abuse of power by him.
I don't think that it's right, but we will go ahead and, of course, Parliament will come back.
Today is not a win for any individual or cause. It's a win for parliamentary sovereignty.
In some more dramatic developments overnight in the United States, House Democrats in the United States will open a formal impeachment inquiry against President Donald Trump over allegations of him pressuring Ukraine to investigate political rival and Democratic frontrunner for 2020, Joe Biden. Let's first listen in to Speaker Pelosi and House Minority Leader Kevin McCarthy.
Actions of the Trump presidency revealed the dishonorable fact of the president's betrayal of his oath of office, betrayal of our national security, and betrayal of the integrity of our elections. Therefore, today, I'm announcing the House of Representatives moving forward with an official impeachment inquiry.
Speaker Pelosi happens to be the Speaker of this House, but she does not speak for America when it comes to this issue. She cannot decide unilaterally what happens here.
Now, Judy Schneider of Bloomberg News is joining us with more.
It is an escalation of the investigation of the president in the Democratic-led House. But no, it doesn't necessarily mean there will be charges brought. At this point, what is happening is there will be 6 committees that will be doing their own investigations and then reporting back to Speaker Pelosi in terms of this inquiry. Some of these committees have already begun such investigations, and it's unclear what more they'll actually be doing. For instance, the House Judiciary Committee has been looking into some things. But clearly, the fact that the House Speaker is saying that she wants this formal investigation, this formal inquiry under this big umbrella means that they are really turning up the heat on investigating the president and whether he has done things that basically violated his oath of office.
All right, let's look at what's making headlines across the globe. Sue Keenan of Bloomberg News brings you the First Word headlines.
President Trump took a new hardline stance against China in his speech to the UN. He ruled out accepting a bad deal and accused Beijing of manipulating the yuan and of stealing intellectual property. Now, his more pessimistic line comes less than 2 weeks before trade talks are due to resume in Washington. The U.S. had earlier welcomed positive comments from China about purchases of farm produce.
The American people are absolutely committed to restoring balance to our relationship with China. Hopefully, we can reach an agreement that will be beneficial for both countries. But as I have made very clear, I will not accept a bad deal for the American people.
UK Prime Minister Boris Johnson, meanwhile, is vowing to deliver Brexit next month, remaining defiant, in the face of the country's top judges saying his suspension of Parliament is unlawful. Now, the Supreme Court said the advice Johnson gave the Queen to shut the legislature down was wrong and prevents elected politicians from doing their democratic duty. Johnson says he disagrees and will deliver Brexit next month regardless.
Let's be absolutely clear. We respect the judiciary in our country. We respect the court. I disagree profoundly with what they had to say. I think it was entirely right to go ahead with a plan for a Queen's speech.
To Iran now. Iran is setting out conditions for any potential talks with the United States, but there appears little likelihood of a meeting at the UN this week. President Hassan Rouhani said the U.S. must end what he called illegal sanctions and return to talks on the nuclear deal abandoned by Washington last year. President Trump has hinted at eventual negotiations, but also struck a tough line at the UN. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan. This is Bloomberg.
All right, let's look now towards trade here in India. Agam Vakil is here to set you up for the day's trade and also to tell you what's happening in the futures and options space. Agam, yesterday we were speaking and we were wondering when the party would end. It kind of did yesterday. There was a bit of cooling off of that ecstatic high that we saw on Friday and Monday. Global cues look weak this morning.
Right, absolutely. And well, Alex, this is around the time when a lot of investors will take stock of how things are. And from here on, we could expect a little bit of sideways movement. You never know. Because so far, at least for the past 1 week, we really haven't seen Indian markets react to global moves. But that could change. It's a wait and watch. But for now, we're looking at the SGX Nifty futures indicating a decline of around 0.4%. Now, when it comes to trade yesterday, we saw Nifty close flat. We did see some underperformance in the mid-cap index and the small-cap index again marginally in the green. The banking indices did see some profit taking coming through. But how are ADRs doing at this point? Well, weakness coming through for HDFC Bank, Tata Motors, Vedanta and ICICI Bank, among others, and marginal gains for Infosys and Dr. Reddy's. Do remember there was a little bit of a reversal in the entire IT sector where we did see some strength return. But as far as your FIs are concerned, what do you know? Net sell figure, once again, back in the red at around 828 odd crores worth of selling coming through. There was a lot of hope around the number, given that the kind of up move that we've seen in the indices. Well, DI is, of course, buying to the tune of 473 odd crores, and that remains, a little bit of a trend. But as far as your contributors are concerned, again, evenly poised trade between gainers and losers. So we did have gains from Reliance Industries, Infosys, TCS, and Maruti Suzuki cancel out to a certain extent by Larsen & Toubro, HDFC, and Axis Bank. We'll be watching out for some of these names as we move into trade today as well. But what about the futures and options space? Now, we are just 2 sessions away from expiry. Rollovers have picked up. Well, Nifty rollovers are 38%, still relatively average. It's tomorrow's number that I want to watch out for. If it's above 75%, we will know that these rollovers are strong. The Nifty banking rollovers standing at around 35% as well has caught up with the Nifty of late. But when it comes to the open interest distribution, as I was mentioning yesterday, we do have a lot of open interest accumulation around the 11,500 put, and it will be hard for the Nifty to close below that. But even if he does, well, the 11,400 is the next level that you are keeping an eye on. But for now, it seems very unlikely or improbable, if I can say, that we would take out 11,000 on the lower end. As you can see, there was more writing around the 11,500 put as a result of that. But let's move on and talk about your wicks. It hasn't really come off, but it's flat around. It's still not above the mark of 17, so that perhaps is also a positive at around 16.7, and the Nifty put call ratio hovering around the same range at around 1.4 against 1.5. But to talk about stocks, we do have Hexaware, which showed some strength following an analyst meet, and we did see a 44% at rollovers. Of course, a lot of longs building in. We have Tata LC, which also showed a lot of strength yesterday, up 5.5%. Some build up as far as your October series is concerned. Sun TV, on the other hand, on the losing end, we're looking at weakness there. And besides Sun TV, we're also tracking NCC, which also cracked in trade yesterday, down 5%. Just a very quick mention on, something like an MCX, which is moving out the F&O, but it did see a lot of strength. So keep an eye on that one as we move into trade today. But Alex, on the whole, we're expecting mixed cues coming in as far as indices and the markets concerned.
Thanks so much for that, Agam. All right. Now, one of the big talking points yesterday was the government's plans for the second half of the year in terms of borrowing. And it plans, in fact, to stick to its borrowing target despite choosing to forego 1.45 lakh crore rupees in tax revenue. Finance Ministry and RBI officials met on Tuesday to finalize the borrowing calendar for the second half of the financial year. Karthik Goyal of Bloomberg News has the details.
The big news being washed by the bond traders was a second half borrowing announcement today, while the official announcement has been deferred to Monday, but officials are telling us there has been no change in the second half borrowing program, and the bond sales are likely to be kept unchanged at 2.7 trillion rupees. At the same time, the bond market has reacted a bit negatively on the news that the government may actually, defer its plan to sell about $10 billion of bonds in the overseas markets. The initial expectation was that if the government sells about $10 billion of bonds in the offshore market, that would take pressure off the local markets. But if that's not happening, the bonds have reacted a bit negatively today, with yields going up by 3 basis points. So the focus now shifts to Monday, when the government and the RBI will officially release the borrowing calendar for the second half of the year.
Right, now, chief financial officers are busy right now trying to decide whether companies should opt for the lower corporate tax rates that were announced on Friday, or to stick to exemptions which would remove them from or not allow them to take the lower tax rates. It's no different at Mahindra & Mahindra, according to Group CFO V.S. Parthasarthi. He also says that jugalbandi of lower corporate taxes and government infra spending will help revive growth. Listen in.
And many companies which are paying 30, 32, 33% have come jumping up and down and saying that we are going to 25. Great. So those are the easy ones. Then there are sectors like the IT sector, etc., where the benefit will be there, but we will have to decide very clearly that whether they have to decide whether 17% MAT or the new structure of 25, which works better, and when should we shift into that. So there also there will be benefit, but how much will be very quickly known once they do the calculation, and more importantly get the clarification that what they are thinking is right. So broadly this is where we fell in. Overall, if I say it is broadly for every company, it's positive. Menka.
Okay, I'm going to ask you, a question that would you have preferred at this point in the economy, given where we are with a slow growth rate of 5%, consumption falling all the way to 3%, would you have preferred a tax giveaway that actually in fact boosted consumption, as opposed to a tax giveaway that is on the supply side and that encourages private investment? Now, I understand the pros and cons of both, but I'm talking about the timing. At this point in time, would you have preferred that the government had actually given away more on the consumption front?
Okay, so I think they are grappling with two problems. One problem is on the consumption. There's no question that there is an incentive required to meet that. And second is an investor and investor confidence. And this is an investment led that more if there is confidence in this front, more investment, more FDI comes, more money gets in, and that's a multiplier effect it has. Okay, so these are both things. So this area fix gives some benefit, a shot in the arm to the stock market, to the investment, to money flowing in, etc., and has a cascading effect towards the overall growth potential that it creates, because there is more money in the hands of the company at this point in time. The second part is whether it is either or whether there is something more which needs to be done on the front of consumption. I think there is more to be done, and I think that could come it could come in the form of, at this point of time, I'm hoping it comes in the form of infrastructure and other projects which then gives room for household incomes to go up, and that drives the second part of the consumption. So I think these two jugalbandi will do. Your question about GST, I think I park it for now because it's a more involved subject, and we will see what we see. But if you ask me, do you want a GST cut, which industry guy today will not say? We all want growth.
I'm not asking you whether you want a GST cut. I'm just saying, could this 1,45,000 crore firepower by the government have been put to better use from a timing point of view through a giveaway on the consumption side as opposed to a giveaway on the investment side? I understand the short to medium and long-term benefits of both. I'm just asking if that would have been better. And so therefore, the last question I want to put to you is, if industries like yours right now are seeing no foreseeable pickup in demand, right? And therefore, at this point, are maybe not feeling so deeply encouraged to invest in new greenfield capacities. You now have a deadline. Starting October 1st, you have to incorporate a new company if you want to set up a new manufacturing unit, and you've got to commence production before March 31st, 2023. But if you don't see the demand picking up in the next 3 months, 6 months, will you be able to commit to that kind of new investment? And if you're not able to commit to that kind of new investment, then is this giveaway what the economy needed at this point in time? Because industries like yours, automobiles, are the largest job creators, investment-oriented industries.
Yeah, so whenever you make any investment, and I'm coming this that whichever industry you start, let's say investment you start in after October, right? So manufacturing cycle in terms of putting up a plant is not a 2-3 year kind of a thing. Okay, your point is generating profit in 2-3 years may take starting a company, getting the new products, new things, and then going from there. That may take longer than 22, but this is more from a point of view of where you complete the manufacturing line and you start selling some products. And I think that can be achieved during this time frame. This seems to be a reasonable time there. The key question of yours is more in terms of, is there more increase in demand there is going to be? Menka, my thought is very simple. This is a very big developing economy. Our headrooms are huge. Today we are suffering from a cyclical downturn, and I think with some bit of patience and some bits of incentivization which seems to have been done, it should start. It may not start this festive season with the kind of rigor we may want and hope for, but next 2-3 quarters has to see the pickup, and when it comes, then capacity will anyway be required. So I think both of them seems to be broadly in the right direction.
All right, let's talk about the stocks that you have to watch out for in trade today. Somit Sarkar is joining me to tell you all about that. Good morning, Somit. What's on your list today?
Well, good morning, Alex. I'll start off with SpiceJet. Now, Bloomberg, in an interview to Bloomberg, the company chairman Ajay Singh said that they're considering to buy at least 100 Airbus planes as Boeing is currently still facing issues with the 737 MAX. Now, the company, that is SpiceJet, may buy a sizable number of Airbus 321 to accommodate its planned expansion that the company has. The second one is on Indiabulls Housing Finance, where the rating on the NBFC's long-term debt instruments and bank facilities have been downgraded to CARE AA+ from CARE AAA. Now, the downgrade in rating was due to the continued challenge that the NBFC and the housing finance sector has been facing when it comes to funding, and because of the elevated risk aversion among lenders and investors, especially for wholesale lenders that have a significant exposure to the real estate sector. Thirdly, Kaveri Seeds would be in focus because the board has approved a share buyback of nearly 28 lakh shares, aggregating to close to 196 crore rupees. Now, the buyback price is set at around 700 rupees per share, which is at a premium of 28%. And the promoters of the company also intend to participate in this proposed share buyback. Bosch would also be in focus because the company has executed a business transfer agreement to sell its packaging machinery business for nearly 145 crore rupees to a group company. Now, the sale of this business would be effective from close of September 30th, that is after second quarter of financial year 2020. Now, the board is also decided to close the company's thermotechnology business. That's what the company said in its announcement to the exchanges. RPB Infra Projects will also remain in focus because the joint venture has received a road construction order in Myanmar worth nearly 400 crore rupees. Morben Laboratories would remain in focus because SEBI has prohibited the company from accessing the capital markets, and it has restrained it from dealing in securities, including mutual funds, for a period of 1 year. Now, the order has come in force with immediate effects. That's what the company's release said on the exchanges. Aster DM Healthcare would also remain in focus because they have signed a lease agreement for 2 new hospital projects in Bangalore. Lastly, Lemon Tree would remain in focus because of the bulk deal that happened yesterday. A bunch of investors have bought and sold shares. RJ Corp and Maplewood Investments sold nearly 7% shares in the company, while the same was acquired by Reliance Mutual Fund, Kuwait Investment Authority and SBI Mutual Fund.
All right, thanks so much for that, Somat. Now, Prime Minister Narendra Modi met President Donald Trump for bilateral talks on the sidelines of the UN General Assembly. President Trump told reporters that he is hopeful of a solution to the Kashmir issue, and both India and Pakistan will sit across the table and resolve issues amicably. Listen in.
I really believe that these two great gentlemen will get together and work something. I also, you mentioned Pakistan, but Iran would have to be at the top of the list because if you look at terrorist states, that's been the number one for a long time. But I really believe that Prime Minister Modi and Prime Minister Khan, they get along, they will get along when they get to know each other, and I think a lot of good things will come from that meeting.
Now, early in the show, we talked about the House of Representatives moving an official inquiry into impeachment proceedings for the President of the United States of America. But how exactly does impeachment work? Take a look.
I'm announcing the House of Representatives moving forward with an official impeachment inquiry.
All right, let's talk about some of the stories you'll find on the website bloombergquint.com if you were to take a look as of now. First up, Power Secretary S.C. Garg has asserted that 5 lakh crore rupees worth of investments in coal-based power plants are in jeopardy due to the shortage of coal, and that there is an urgent need to bring in large global players for commercial mining to boost output. And the Ministry of Labour and Employment has notified an 8.65% interest rate on the Employees Provident Fund for 2018-19, which will now be credited to the account of more than 600 crore subscribers of the EPFO, according to Union Minister Santosh Gangwar. Well, that's all you need to know going into trade today, but there's a lot more that will come up over the course of the next couple of hours, so do stay tuned. This is Bloomberg Quint.